Hi guys, good evening. So this is the second lesson under our intermediate forex series. So what we'll do right now is I'll always record the lessons and then I'll pause. You watch, you leave your comment, you leave any question you have under the comment section here on YouTube, and then I will come back, read it, listen to it, and then from there I will make another video explaining every single thing and then answering your questions. So the first lesson we spoke about, or the first thing we did was supply and demand, okay? Or you say demand and supply. Why demand and supply? So demand and supply was basically the first because this is the foundation of every single strategy you see out there. If you don't talk about supply and demand when talking about how the market moves, then that is totally out of place. Why? Because sales coming because of supply and buys coming because of demand, and then you have price reacting on certain key levels because of what? Because these areas are supply zones. For example, this just permit me to pick out these areas where price has been selling. And then I told you the other day that a resistance zone is it's an already used supply. Okay, when you have a supply zone, that's it. And then when price comes to it, the supply is over. If price ever takes that same zone and then you find sales coming in, that is basically now a resistance zone. And then the inverse is true for what is the inverse is true for a support zone. So support zone is an already used demand zone, a demand zone that has been used over and over and over and over. So we said supply zones are areas where you see strong sales coming into the market. They will always change what? Change direction from an uptrend to now a downtrend. So what initiates this change of character? Obviously a supply zone. And then a demand zone changes direction from say a downtrend, and then the moment price hits a demand zone, you get a shift in structure, and then you have this. So what initiates this change of direction? A demand zone. When price comes multiple times into this demand zone, what is it called now? It is called a support zone. So a support zone is an already used demand zone. Are we perfect? And then the first thing I also told you something the other day, I believe yesterday. I said, how will you know a demand zone is potent or a supply zone is potent? So how will you know there is this supply situated around this area here can change direction or has the possibility of it stopping this uptrend move? How do you know a supply zone is potent? How do you know a demand zone is potent? How do you know it's valid? That is the question. And then I told you it is very, very simple to know when a supply zone will hold or a demand zone will hold. It's very easy. And this is just the whole confirmation trick I use on all my trades. Okay. So you never trust the key level. First thing first, mark out that key level. If you see this area and you understand, oh, this is a very strong sell zone, that's a supply zone. Perfect, perfect. We haven't spoken about the qualities of a good supply and demand zone. So we're going to do that in today's lesson. Make sure you watch till the end. So how will you know that this demand or this supply zone found around this area will hold price right now? Okay, how would you know? It's very easy. What price gets to that area? Okay, you're going to have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, the moment you make this last higher high, and that it hits this supply zone, if the supply zone is valid, you are going to get a what? You are going to get a higher low being broken. And when price violates that higher low, which is this, it now forms a lower low. So this is a lower low here. So when a higher low is being destroyed, it forms a lower low and structure shifts from an uptrend to a downtrend. Now you understand that this supply is valid. This supply has been respected. Same thing here. How will you know this demand around this area will hold price? Like I said, never cross a key level till you see a reaction. How do you know this demand zone is valid? Wait for price to make its way there, forming its lower lows, lower highs, lower lows, lower highs. it makes the last lower low. The moment it hits this demand zone, you need to see buyers come in and then they destroy this lower high. When they destroy this lower high, we now form a new higher high, and then you have what? You have trend shifting from a downtrend to an uptrend, and you will say that this demand zone where price reacted on is a valid demand zone. For example, this is what we had on Euro USD today, or let's say yesterday Monday. Okay, so yesterday Monday price hit at the supply. I want us to use this one. So price hit at the supply around this area on Euro USD. It took our liquidity from this level. Now, how would you know that this supply zone is valid for you to take a trade? Remember, you never trust as a key level. Never trust any key level. Wait for a what? Wait for a structure shift. So this was your last lower high. Okay, this was your last higher low, sorry, before price made this higher high. So the moment price was moving like this, and then it created this last higher high, the moment of price breaks this higher low, you now form a new lower low here, and at a retest, you take a trade. So this is just the whole confirmation thing I was teaching you about forming in the market. So this was a trade we took yesterday, Monday. I shared it during my live session on TikTok. So always join me live. I'm going to add my TikTok handle so that you can just follow me on TikTok. Very easy. We take trades together, we trade together. It's a very beautiful moment every single morning, 8 a.m. Plus one. So same thing happened here today. The price left the supply here at the point. Price came here in the morning, and the next thing you have is price disrespecting these higher low, and then this is the crazy movement happening right now. We're going to have more sales, or price is just going to come back and then remains maybe in a range or in a consolidation, because the market is definitely waiting for FOMC. We have FOMC tomorrow, Wednesday. So because of that, the market hasn't really been doing much. But then this whole switch structure here also shows you that this supply zone is valid. Now, going back to demand zones, let's look for a demand zone. Okay, so let's just use this one. This is not the best of demand zones, like I said. I'm not teaching you qualities of a good demand zone. I'm just telling you how you can see price when it comes to demand and supply zones. Price left like the buy pressure from this point was really strong. Like you see, this is Euro USD hourly time frame. And then what do you get? The moment price got into this point, you now have the trend switching from a down move to an uptrend. Okay, you have price moving from this downtrend. Price was on the downtrend, and then now you have price shifting to an uptrend. So what do you expect? More buys. So that means that demand zone was potent. This demand zone was valid. Same thing here. This was another demand zone. All of these things, these areas are mapping the trades we took last week, okay? That these are trades we took last week. So this was a perfect demand zone, perfect demand zone. We have strong buyers coming in from that area. So what do you do as a retail trader? Remember, as a smart money trader that you are still a retail trader. So the only advantage you have when you're learning smart money concept is you can see institutional footprint. And the first institutional footprint I'm teaching you right now is this demand and supply zone. So the moment you got this demand zone here, all you have to do is wait in future when price comes back to it. And then when price comes back to that level, you see that price was in this downtrend movement. Downtrend now shifts to uptrend, and then you have more buys coming in. So what does it mean? It means that this whole area was a very valid demand zone. So are we perfect? If we are perfect, then that is just it for demand and supply zones. Now, the next key level we are going to talk about, which happens or which the market creates when demand and supply interact in the market, we are going to talk about fair value gap. So this is the second point of interest we are going to talk about. So we say fair value gap, or you call them FVGs. Okay, fair value gaps or FVGs. You can also call them imbalances. Voila. So you have fair value gaps or FVGs or imbalances. So now, what is a fair value gap? How is a fair value gap created? How is that imbalance? When you hear the word imbalance, what comes into your head? Imbalance. Imbalance means something is not balanced, right? The opposite of balance is imbalance. Balance, imbalance. So what means imbalance? An imbalance is definitely a price point or an area where sellers do not equal buyers or buyers do not equal sellers. Easy. So either you have a sell imbalance or a buy imbalance. I'm going to tell you, and we're going to pick them out on the chart. I'm going to show you the differences between a buy imbalance and a sell imbalance, or a buy FVG, a bullish fair value gap, or a bearish fair value gap. We are going to talk about that. So let me switch, say, to the daily time frame. Okay, so let me switch to the daily time frame, and then let's try to pick out these fair value gaps. So on a normal, I don't know, I thought candle theory, like candlesticks from our beginners lesson, so it should either be lesson 3, I guess. Lesson 3, you can go watch in the beginner series just below. So I said, when a candle opens, when you get this kind of candlestick, this was yesterday's candle, for example. You have the low of the candle, you have the high, that is the high here. Now, when you come into the next day, this is the low of the candle, and then price went up back to the high of this candle. It made the high, that is it. Now, when you come to the next day, okay, this was Monday, this Tuesday, this is Wednesday. So now you see that Wednesday's candle came back to the high of Monday, and you get that mitigation or price comes back to, let's say, to kiss that the high of Monday. So this is it. So because you have this Wednesday's low kissing that off Monday's high, there is no imbalance. You call this efficient price delivery. So there is an efficient price delivery here. Now let me show you this. Just look at this very well. Let's come now to this other guy. So how is this different from this? So this is efficient price delivery or a balanced price distribution, meaning price, the buyers and sellers at one point, though price was bullish, you had equal amount of buyers and sellers like during certain parts of the day. That's why you have no fair value gap. Now this here is a fair value gap here. And how is this fair value gap created? Let me now show you the difference. So this is, say, Wednesday's candle, that is the low, and then this is the high of the candle. Okay, now you come in the next day, Thursday, this is the low of the candle, and then this is the high of the candle there. And then now you come the third day, which is Friday. Now this is the low of Friday's candle, and then this is the high of Friday's candle. Now, do you see the fair value gap? Do you see the fair value gap? This now here is a fair value gap. Why is this a fair value gap? Because this low of Friday, which is the third candle, this third candle's low did not come down to kiss the high of the first candle, which let's say was on Wednesday's candle. Now, if price would have done this, it would have looked like this, and you would have had an efficient price delivery. But because price did not do it, it now leads you to what we have, and we call this a fair value gap. Okay, this is a fair value gap. The fair value gap is definitely an imbalance that is formed within 3 candlesticks. Okay, you will always see a fair value gap inside 3 candlesticks. You must have 3 movements: 1, 2, 3, and then if the third candlestick low does not kiss the first candlestick's high, you will be left with a fair value gap, meaning now this is an imbalanced price delivery. It means that price was so bullish to the level that sellers did not even have the little energy to come back down here before continuing to go up, meaning the retest wasn't even up to this point. Price gave us a very small retest like this, and then it continued to push. And this means that buy pressure is a lot. So imbalances here even helps you to do what? To pick out good demand and supply zones. Why? Because these imbalances signify high, like high blood pressure. Can we say that? Yes, meaning the blood pressure was too much. That is why you have this imbalances. But then when you don't have an imbalance, it means that there were equal amount of buyers and sellers at one point, though after buyers came in, continued to move price back and forth. But then when you have these imbalances, it shows that the buyers are really, really, really more than sellers. So then, how do you trade these fair value gaps? But then, before going to that one, I want you to know the differences between buy fair value gaps and sell fair value gaps. So this here is a buy fair value gap or a BC. Okay, so this is now a buy side imbalance. Okay, so you say buy side imbalance, sell side inefficiency. Okay, let me spell this. Perfect. So it is abbreviated BC. It's a buy side imbalance, or side inefficiency. So buyers were a lot in the market. So this BC is always on a blue candle. But then when you want to talk about the next kind of fair value gap, which you're going to see maybe on a sell candlestick, let me pick a very good one. Okay, let's use this one here. This now is a sell fair value gap, okay, or a sell imbalance. This is it. Clean and beautiful. You have one candle, two candle, and then you have the third candle. Now, when the third candle fails to pierce here now the low of the first candle, then you have an imbalance. Very, very easy. So if the high of this candlestick came to give a warm hug to the low of the first candle, then you would have had an efficient price delivery. But because this candles high, the third candles high do not have time for this, then we have this fair value gap. So this fair value gap is also an institutional footprint that alerts us retail traders, which now we are trying to be smart as these institutions. It alerts you that this area is a potential area where if price comes down in future, you are going to see sales. So these fair value gaps also help you to pick out good supply zones, because if you want to know that this area is a very perfect supply zone, then you need to see strong sell pressure. And this strong sell pressure is definitely, you see it, it is being represented by what? Is being represented by using this fair value gaps. So this is a CB. Okay, now that's a sell side imbalance and a buy side inefficiency. There. This. Now you see how sometime in future price came back, reacted, and then what did you have? More sales. So this is just how you trade this, guys. So your homework today, I believe we're done. We've learned two things in today's lesson, okay? We've learned demand and supply zones and how to know when they are valid or not valid. And then we have learned the fair value gap. Not all fair value gaps are valid. Okay, the only time you know that a fair value gap is valid is the same thing I taught you how to know when a demand zone or supply zone is valid. Wait for price to make its way to that fair value gap, and then if you see a switch in direction from this uptrend to a downtrend, then it means that this fair value gap is valid. But then if price gets to this fair value gap and you keep seeing uptrend, what does it mean? It means that price has violated this key level or this fair value gap. So that's all. Now, what's your homework? Your homework is make sure you go to your chart, pick out the fair value gap and demand zones, and then you can leave me a message. Should I even write my number? So if this is your first time you're coming across this YouTube handle, make sure you leave me a message on this number. Okay, so that is +237 677 81590. 7. All right, so that's my number. You could get to me on this on WhatsApp. Send me your homework so that I could see. If you have a question, make sure you leave it in the comment section, and then I will do well to answer you. Okay? And see you in the next lesson, lesson 3. I'll try to update that tomorrow. See you guys. Bye bye.